welcome to yet another session of Value Talks. I'm Captain Gurpreet Singh, retired from Army, today's host on Value Talks platform for this, event today. So I moved out of Army in 2011, and since then I was into corporate for 11 years. Recently, I moved out of corporate, and now I'm pursuing my passion, which is financial products and financial services. Just to share something around Value Talks for people who are not aware. So it's a platform which provides advisory services on issues that are important to individuals and community. It's an effort to invite experts from the field of varied fields. You can call it career, finance, real estate, insurance, law, doctors, and any other allied fields for live talks. We have a panel of experts, which you can also see on the screen. So pretty much all the fields are covered by the board of experts what we have on our panel. We have till date held talks about real estate, about mutual fund, about equity investment. We have also done 2 sessions on options trading so far. We have done sessions on taxation, property loans, RERA related to real estate, construction, interiors, entry into armed forces as officers, transition advice to armed forces officers, construction, interiors, session for doctors and nurses, how to go abroad, so on and so forth. So today, this particular talk is related to options trading. I'm sure some of you must be already doing options trading, and some might be having profits out of it. Some others may not be gaining anything out of it. Because as we say in investing, what is comfortable is really profitable. So you have to put a lot of efforts to really generate profits. Another fact related to trading is that only 1% of the traders are able to generate money. Balance 99%, they struggle. It's not that this 99% population, they want Ferraris and luxury lifestyle for themselves. They just want to, create some more additional source of income for them, and definitely want to sleep well at night, right? The only way to do that is to put in your best efforts to learn things before you actually execute things on ground. So with that, I would want to introduce the guest, what we have today, Mr. Puneet Gulati. So he's a IMT Ghaziabad alumni. He has done certification in derivatives from NISM. He has done a employer-sponsored certificate course from Princeton Institute on derivatives, and guess the employer was Macquarie. I'm sure all of you would be aware of Macquarie Bank. He has more than 20 years of experience in financial markets, worked with Macquarie, worked with PN Vijay Financial Services, worked with Island Finance, which was an industry integrated financial education provider. And since last more than 2 years, he's focusing on delta neutral derivatives. So he is a proprietary trader and options trainer. So welcome, Puneet. Welcomes to Value Talk session.
Thank you, Guru. Thank you so much.
So Puneet, as I was discussing, as I mentioned, only 1% of the traders are able to really generate profits from market. Many people, they join markets to pursue their goal of earning some additional income out of it. But what actually happens is they try for maybe 1 month, 2 months, 3 months, 6 months at the best, and then they exit the market after making huge losses and really cursing the market that this is the place, where I lost everything what I came with, rather than really earning anything out of it. Right?
Yeah. beg to differ with you. I mean, this is not 1% people who make money these days. Things have changed. Things have changed largely. I know lots of people. I guess, I mean, if you ask me, being in industry for quite some time, there are at least 20% people who make some money at least. I'm talking about the people who are in market for, for quite some time. I mean, not the beginners. There are many people who join in, they, struggle for a month or so and they move away. But the people who stick with the markets, who follow some, I mean, who undergo some training, who follow some, who have a mentor or anything of that sort, at least 20% of them make decent money. Decent money. When I say decent money, I'm not saying they make 50% return every month or so, but they make reasonably good money. I mean, they can, they generate their living out of it. There are at least 15 to 20% of such people. I mean, with time, people have learned, that this is not a casino where you can gamble and, make money on an instant basis. So second is, yeah, it is difficult. Like whenever we start a career, we undergo a lot of education, lot of training, lot of experience. Then only we initiate that. In earlier discussions, I have mentioned that, I mean, trading in stock market is like driving a car, driving a Ferrari. So if you are driving a Ferrari without proper training, I mean, accidents are bound to happen. So till the time you are not thoroughly trained, you haven't gone through the training sessions, the stimulations, you hire a driver or you do paper trading. Paper trading is as good as you are driving, you are learning driving on a machine. So machine is kind of, preventing those accidents to happen, making you an expert driver. So before you venture into market with real money, it is very, very important to understand it thoroughly. Here I'm talking about market. When it comes to options or when it comes to derivative, these are leverage products. So these are actually Ferrari with the turbo engine. Even more difficult.
Absolutely correct. And I think you hit the right topic, because today so much of information is available on Google and so many other platforms.
Exactly.
People are actually confused.
Yeah.
When they go to Google, they punch in options trading, they would get zillions of options. I mean, people who are so-called trainers, people who are so-called tips providers, paid channels, etc., etc. So what happens in reality is, and this has happened with me, this has happened with so many people with whom I'm in touch with, right? So we end up listening from probably 20 different people, mixing up their advice.
Oh my God.
And then you know the result, right?
So it is like you're trying to learn driving from 20 different drivers.
Exactly. That's what is happening. People are not focusing on one mentor or one platform for a particular advice.
I mean, this is very common with, when you use Google for any purpose. This is a very, common issue. Google does not tell you which information source is very reliable and which is not. So for that, you need to use your judgment or some experience with, say, you have identified, like you have searched option mentors or option consultants. You got to know 20 people. So out of those 20, you will check their profile. You will shortlist 5-6 of them. You will try with them, and then only you will be able to identify 1 or 2 which are actually, going to suit your requirement, suit your temperament, kind of thing. So, I mean, it is very common whenever you access Google for any information. Google throws lots of information. Most of it is not very relevant. So one need to be very careful and a little bit vigilant, and do some experiments to find out the right information or the right information provider for that.
So I think that's the intent of having today's session, so that people on Value Talks platform can have direct first-hand information from someone who is as vintage as 20 years plus in this industry, who has been a trainer, who has been a trader himself. So Puneet, that's what we want to hear from you, that how we can ensure that there is a consistent low risk return coming out of options trading. And probably if you can use a simple language, because there could be some people who really don't understand options at all. They are also beginners like me. So that will be really helpful. I know we have already done two sessions on
sessions.
options. So people, if you want to visit the old videos, not only related to options, but related to equities and other related fields, what we have covered on Value Talks, please visit the YouTube channel, and you will have visibility to all of the old videos. So Puneet, how can we mitigate risk and still earn profits out of options?
Like for say next 5-10 minutes, I'll be repeating what I have discussed in the earlier sessions. The object, I mean, the purpose is maybe most of the people have joined this session for the very first time. Like it's, I always say that basically options were originally introduced for hedging, for risk management. Like when I was with Macquarie, I was heading their energy price risk management desk. So we were kind of mitigating the crude volatility or coal volatility price risk for the corporates. For that purpose, we were using options. So I'm my kind of my frame is tuned to believe that only that options should be used for hedging only. I mean, this is not something you can speculate with. You can speculate and you can be very successful provided you are very, very knowledgeable. First thing. Second is you're very fortunate also. I mean, somebody with the average luck, average fortune like me or any common man, making money while speculating in options or futures for that matter is next to impossible. It's next to impossible. So for that purpose, like if you want to be a successful option trader, you need to understand the basics of options, keep your expectations lower, and always use them while protecting your risks all the time. I mean, you can't buy a call, sit on it for 2-3 days, wait for the market or the stock, whatever this call is pertaining to, go up and give you the money. That will never happen. It may happen once or twice, but whatever you will earn will eventually, you will give that money back to the market. I mean, luck will favor you once or twice. Next time, I mean, your call value will be zero. Selling is even more riskier. I'll not go into those buying and selling kind of things because we have discussed them earlier. And there are many sources to do that. I mean, many sources to find that information. Lots of books are available. Lots of videos are available. You were just, you mentioned about this Google thing. I would like to advise people that instead of going at YouTube videos, which are very convenient to watch, I mean, it is better to find some good books. Books are available on internet also, or you can, I mean, one can buy the books, one can buy the book from any, any portal for that matter. Understand those books. Books are having authenticated information. YouTube information is, is provided by somebody like me or somebody who knows a little more than me or little less than me. So it may not be very, very reliable. Having information, learning something using a proper validated book is, it makes a much better sense.
No, that's a great point, Puneet. And I would request after this call, after this session, if you can put in some names as a reference.
Definitely, books, I'll do that.
As reference on the Value Talk session, so that people can use their discretion and buy books and learn.
Definitely, I'll do that. So in earlier 2 sessions, we have discussed what are the basics of options, and why they are less riskier than other conventional mode of equity or what you call derivative trading. Like I have in last session, I have tried to explain why it is better than even plain equity. Plain equity trading, not investment trading. Like whenever you buy some shares, say you have bought some shares of Reliance for that matter for say 2,600 rupees. Now, if it will, if the price of Reliance will go 1 rupee up, you will make money. If it will fall by 1 rupee, you lose money. So hypothetically, your probability of success is 50%, not more than that. I mean, forget about the news or whatever homework you have done while selecting that. Just keep that aside for the moment. I mean, what you can do is 50% chances you will make some money, 50% chances are you'll lose some money. I mean, that's how it is with equity investing. That's how it is with futures. So what I prefer to do is how we design the option combination strategies is we trade a range. So say, let us stick to the same example. Reliance is available at 2,500 rupees at the moment. We will design a strategy that will keep us in profit till Reliance is say from 2420 to 2580. So that is, if it falls by 80 rupees or if it goes up by 80 rupees, you will make money. So that enhances your probability of success, probability of making money. You will lose money only if Reliance falls below 24.20 or goes about 25.80. Then also, I mean, say, generally it doesn't happen overnight. So you also have an option to make some adjustment in your, in your original plan. You see Reliance falling down, you can do some adjustment and drag your lower range even lower, say from 24.20 to maybe 2400 or 2380. So that facility is available with options. I mean, everybody should make use of it. That is the purpose why, why we have options there. I mean, it is definitely not for speculation. If you want to be a long-term player, if you want to be among 1% according to you, 20% according to me, so one has to understand it and I mean, do it like that. So I have discussed a few strategies in my earlier sessions. This session, because I guess I have covered the basics and the other things, I want to stick to strategies only. I will share two, I guess I've already shared them on the channel. So I'll discuss those two strategies, and whatever doubts anybody is having with respect to those strategies, I'll cover. These are very risk-free strategies. I would still say if somebody is new, not very familiar with the concept, he may do paper trading initially before getting into an actual trade. Or if somebody is really interested in trading them in real world, maybe he can consult some financial advisor or somebody in his vicinity who knows about option trading, who can explain him what are the possible losses or whatever. I mean, what kind of money he can make. Pros and cons can be understood thoroughly before jumping into it with real money.
Definitely, that is required. But before we get into strategies, Puneet, so you mentioned it is less of speculation and it is more like a hedge, what we do in options to generate low risk returns.
Yes.
But like you just took an example of Reliance, right?
Yeah.
And you mentioned some numbers that if it doesn't go below this and if it doesn't go higher than this, so does this mean that people who are doing options trading, they should first of all also learn or simultaneously also learn technicals?
Frankly speaking, if you are trading in the market, even if you're not doing options, you need to understand technicals. Right? Nobody can trade without learning technicals.
Wonderful.
Trading is not possible. You can be a long-term investor without understanding technicals. If you are a trader, you have to understand technicals. Otherwise, you can't trade. I mean, it is as simple as that.
As I mentioned in the beginning, there can be some beginners in the group, so that's why I picked up this point.
Please,
there are
I would advise those beginners to learn some technicals, have fair idea of technical. It's not very difficult actually. Learn the simple things. You don't have to write a book on technical analysis and learn it for a year or two or things like that. I mean, you can learn certain simple basic things within a week or so. Understand what is moving averages, understand what is the basic indicator RSI. Understand these 2-3 things, and on the basis of that, one can start his journey and learn simultaneously. Like you want to buy Reliance, you need to have some basis of why you want to buy Reliance. You need to have some reason for that. ना वो gut feeling से तो काम नहीं चलेगा यहाँ पे. मुझे Reliance अच्छा लगता है. I like मुकेश अंबानी कल टीवी पे आया, बहुत हैंडसम दिख रहा था, तो मैं Reliance खरीद दूंगा. I mean, it doesn't work like that. You need to have some basis. This base can be Reliance अपने 20-day के moving average के ऊपर close. So I mean, this is a valid reason. हाँ, 20-day के जब तक 20-day के moving average के ऊपर है, I'll stick to it. I'll buy it and I'll remain in the position.
But I'm telling you that 80% or that 99% of the population, why they lose money is because they only go by something which is mentioned by Puneet, which is mentioned by Captain Gurpreet or someone else on the YouTube channel or on the Google, and they blindly just follow it. They either take the...
I'm sorry, I'm being a little blunt. My advice to all such people is, everybody has some gurudwaras or temples around their houses. Please go and donate some money over there, instead of losing it into the market.
Absolutely correct. So, but I would also, Puneet, suggest that when you are, giving us names of those books after the session, maybe you can also recommend some books or some good sites, etc., where people can also learn technical. That is equally important.
I'll share two books and two good sites where genuine and reliable information can be found.
Okay, so now we are moving to strategies, Puneet.
Yeah. So, like we will deploy some nifty option combinations for a few low risk trades. The trades that I'm going to discuss today are very, very low on risk. We'll see them as we move forward. So this is the first one. It is a strangle with future. I have covered last time what a strangle is. I'll
Puneet,
just repeat it for the. So this is a strangle with the future. I mean, let us understand that. Okay, I haven't. Revealed the whole thing. Anyway, I'll do that later. Let us understand the outcome first. This strategy has a break-even range of 16,300 to 18,950. It means if Nifty closes, if on say end of September, I guess it is on 29th of September, if it closes between 16,300 and 18,950, we will not lose any money. There will be zero loss. There will be some profit, of course, but that profit will vary. That's why I'm saying it will be zero loss. The safe range for the strategy is 16,600 to 18,600. What I mean by safe range is once you are into a strategy and Nifty or your underlying goes out of this safe strategy, you need to make some adjustments in the strategy. As long as it is within this within this safe range, there are absolutely no adjustments required also. Stop loss for the strategy is 15,000 bucks. Like on any given day, if there is a loss of more than 15,000, one can either close or make some adjustment with this strategy. Probably this 15,000 will happen only when the safe range will be crossed. The target is 5%. We can achieve this target within, say, by early third week of September. The total profit possible is 9% approximately. So as long as it is within this safe range, we can hold it and wait for the higher profit to come. So now it says maximum loss unlimited. It is unlimited only if Nifty moves out of this break-even range or actually closes out of this break-even range, and we have not used the stop loss or we haven't done any adjustment if once it was crossing the safe range. If we don't follow these two rules, the loss can be unlimited. But if we follow these two rules, the maximum loss possible is 15,000. That is also possible only if Nifty is kind of out of this range, 16,600 to 18,600.
So you are
at the moment at the moment we are at 17,500. So this is approximately 1,100 point safety on both the sides.
Yeah, so you are saying if Nifty stays in this safe range,
yeah,
at max we can have a loss of 15,000. Obviously, if we have stop losses in place, but
what I'm saying is if it is within the safe range, there shouldn't be any loss at all.
Right.
Shouldn't be the loss should not be 15,000. 50,000 probably we will see only if it moves out of this range.
And that movement out of this range can happen because of some macro, situations which we may not be able to foresee. It can be something like a
definitely, it can happen. That kind of risk is always there in the stock market. Statistically, July 2022 was the month when Nifty has gone up by 1,378 points, 1,378 points. This is by far the highest gain Nifty has made in a month. In terms of percentage gains can be higher in earlier months, but number of point wise, this is the highest gain we have seen in Nifty since the Nifty has started. So here we are safe by approximately by more than 1,300 points, I guess. Am I correct?
Yes, you are correct. And
yeah,
in fact, if we go to history, Puneet, I'm sure you would be aware, July is generally the month. I mean, if we go back 15 years, 20 years,
exactly.
you end up making profit. I mean, Nifty generally in July.
And that is all equity market across the globe generally go up in the month of July. They fall in May and they recover in July. This is the common saying.
Correct.
So I don't see, because since we have already seen a rise of 1,378 points in July, I don't see the same happening in August. At best, we will close the month of August with say 500-600 point of gain, not more than that. I mean, anyway, beyond 17,000, even at 17,500, our valuations are not very good. Like we're not very comfortable with the valuations even at these levels.
Yeah, valuation is one thing, and I believe we are sitting on a very strong resistance as well, which is at
Definitely,
17,500, 17,600.
definitely,
So
definitely.
it's
Now,
difficult to beat it.
even if there is a correction, we are safe up to 16,600. Even if we see a correction, though it is not looking like the momentum is very strong, market is making a new high. I mean, new high after the recent fall every day. Every day it is closing at a higher level. So technically, there is absolutely no problem. But like while we are talking of strategy, we are talking of safety. So this is, I mean, this gives adequate safety, I believe.
But tell us something more about this particular, strategy. So what combination have you used?
So it is a simple, very simple 4-leg strategy, wherein we are buying a September ka future. This is the today's closing rate, 17,618. We are also buying a put, a deep in the money put, which is of 18,500 strike, and the closing price of that was 984 rupees. So now, like while I'm buying these two things, these are mutually adjusting. Like the moment Nifty will fall, the price of put will go up. If Nifty will rise, price of put will come down. So now, I mean, this is a hedging framework for us. So within this particular, hedged, hedged legs, I have chosen 2 legs for making actual money. These are 16,500 put and 18,500 call. So the prices mentioned are today's closing prices.
Got it. But what I can see, there are 4 combinations, or there are only 2.
There are 2 strangles basically. One is you are buying a strangle and you are selling a strangle.
Got it.
So one strangle has one future and one deep in the money put. Other strangle has 2 lots each. So you are selling this deep out of the money strangle.
Got it. And would you also want to discuss something around the Greeks? I mean, are we getting a better delta theta here, or this is a risk?
In my last interview, I have shared what are the safe levels for a Greek when we buy a monthly, when we create a monthly strategy kind of thing. Here the delta value is 0.24, which is very, very good actually. I mean, anything on a monthly strategy, if the delta is around 0.3 to 0.5, I mean, it is considered safe. Theta is 12.287. Theta is a little less for a monthly strategy, but it is too safe actually. It is, I mean, I don't know if there can be any safer thing with this kind of return. That's why theta is less. You mean we are buying one in the money, we are selling 4 options and we are buying 1 option. That's why the theta is less. Gamma is 0.0007. It is damn safe. I mean, gamma less than 0.0020 is considered good. Vega up to 100 is good when you are 1.5 months away from expiry. So the Vega here is -50 only. Now this probability of profit, I mean, this particular site has some issues with probability of profit. This 34% is not correct. If we go to some other, other portal, they'll give a brighter picture. Probability of profit, we can calculate ourselves. We know what is our break-even range and what is, break-even range. So looking at break-even range, I guess the probability of profit should be more than 80-90%.
Got it.
I mean, we will be trapped into this only if there is some black swan event kind of thing. Then only market can fall below 16,200 now, or 18,900 is very, very unlikely. Again, the beauty here is like we can make adjustments. Like say market goes a little up. Say after 2-3 weeks from now, we realize that Nifty is at okay. I mean, hope there's no harm in imagining things at say 18,200. So at that point of time, what we can do is we can cover this 6,500 put and shift it upwards. We can sell maybe 17,500 put at that point of time. This will drag our break-even range even higher. From 18,900, it will go up by 300-400 points. So that room is always there.
So Puneet, if someone has to create his or her own strategies, is it practically possible, or a beginner should always rely on some trainer or mentor for these strategies to be validated? What's
So the
your
thing
take?
is, options has lot of risk. They require a lot of skills also. We need to understand so many things. I mean, also you mentioned about technical analysis. I mean, that is a must even with the strategies. Now, I mean, maybe somebody can, raise this question that this is too wide a range. Why do I need to understand technical analysis for this? But I would still say, I mean, even if the range is very, very wide, understanding technical knowledge is very, very important. So say initially, maybe for first at least 1 year, one should have a mentor or undergo thorough training. Whatever strategies he's designing, he or she probably can do a paper trading with them. Once somebody is profitable for say 3-4 months, then only he should, he should venture into the real world. He should deploy his real money into it.
And paper trading should also be done at least for a couple of weeks. It should not happen that
I said couple of months. I said couple of months, especially
right.
when you are doing it with strategies, when you're doing
Right.
with options, when you're doing with options. Maybe if you are trading cash, I mean, what you can do is an investor will turn a long term, a trader will turn a long term investor any day. No issue on that side.
I think that
You
is
bought
another
something
problem.
for trading, it didn't work out. Now you are an investor into it. You are waiting for the right price to come, and you'll sell it after 6 months or a year or things like that. But when you are a trader, you can't afford to do that. Your exposure is big, especially when you are a leverage trader, especially when you are trading options. You can't turn an investor anyway.
Another
So
good
if
point.
you are trading options, you
Right.
need to do paper trading at least for a couple of months.
So paper trading, definitely it is required for a couple of months. But the other point which I really loved is, and that happens with many of us, when trades are not going fine, we end up investing into it. So we should not be doing it. That discipline we have to bring in ourselves. We should clearly define that this is the capital which I'm employing for my trading, and this is the capital which I'm employing for my investment. Ideally, we should have different trading accounts. I mean, we should have different demat accounts, one for trading and one for investment, and we should not mix up capital of these two accounts. Otherwise, there will be a problem.
Definitely.
So, Puneet, here in this strategy, what you are saying with a capital of 2,35,000, if I'm reading it correctly.
Yeah, I can't see that part on my screen because it is, it is showing.
So estimated margin, what you have mentioned is
2.35. Yeah. It can be a little. It can be a little more actually. I mean, it varies from broker to broker. It can be a little more, maybe 60,000-70,000 rupees more. I mean, depending on the broker you are using. So, but it will not be, I mean, too much out of the way.
But we can easily make 5% out of it in a span of what, couple of months? Max 2 months, right?
Provided market says in this particular range, you need to be convinced that this range is safe. If you think this range is safe, you'll make 9%. Now, who's stopping you?
So Mr. Ketan has mentioned that probably on angel broking it will take 1,80,000. So yes, it can vary from broker to broker.
Yeah.
So
I mean, broker to broker, it can be say 20,000-30,000 rupees down and 20,000 rupees up. Mr. Angel broking probably has not calculated the cost of this. He's calculating only the margin. Now we are buying a put which is very expensive here, 9,083 into 50. So this is not the margin. This is the capital required actually. So if you add that to it, it will be around 2.5 lakhs.
Sure.
Like when we calculate the margin, we don't include the cost of the puts. Many broker portals do that.
Sure, Puneet. And I think there is another strategy which you want to share with all of us today.
Yes. This is the second one. This is this was the version 1 of the earlier one. This is this is even safer than the earlier one. So rest of the things are same. All I have done is let me disclose it. Yeah. All I have done is instead of selling 2 options, I'm selling only one here. So that brings my ROI down, but it increases safety. Now here I'm safe as long as Nifty is above 16,332. If the expiry is above 16,332, there are no chances that I'll lose any money into this. And beauty is above 16,500. Above 16,500, I'll make 6%. Nobody can take this money from me. wherever the Nifty is. If it settles above 16,500, I'll make my 5.96%. So it involves same one future, one long put, and one lot of call and a put. I mean, the short side angle is having single lot.
And that is the reason why the margin requirement has also gone down.
Yes.
So with a margin of approximately 1.5 lakh.
1.41, I guess the margin will be a little higher, because if you include the cost of this particular thing, it will be around 1.8, 1.9, somewhere around that. And you'll be able to make 8,000 rupees onto it. I mean, I don't know what that percentage will be, but this is absolutely safe. Absolutely safe. Provided you are convinced that it will not go down to 16,315.
Yeah, that can only happen if we have another black swan event, as you rightly said. Otherwise, chances of Nifty going below 16,350 are very, very less.
Very, very less. I have still given a safe range here. The moment it falls below 16,600, maybe we can close it, or we can do some adjustment.
But Puneet, tell me one thing. If these strategies are available, I'm sure many people would be using similar strategies or some variants of these strategies. Yeah. Why they still end up making losses? I mean, is it more to do with our patience, our discipline?
Exactly, temperament and patience. Yeah, this strategy will expire after 50 days. You need to sit with it. I mean, you need to take a position and sit on it for 50 days. It is not possible for so many people, for most of the people actually.
And do we need to monitor it and watch it on a day-to-day basis?
I mean, you know the range. You can monitor it daily, or you don't need to do that also. I mean, once Nifty will fall below the safe range, you will come to know it is too wide.
So it is something that even if I'm not watching it on a daily basis, forget about the entire session of the market.
That is how it should be. Focus on your other business, other job, whatever you are doing. I mean, let your money grow. You try to get 3, 4, 5% kind of gain out of it using these safe strategies. No stress, nothing. No need to look at what Dow is doing, what SGX is doing.
Got it, Puneet. Any other risk, Puneet, associated with these sample strategies which you have shared?
There can be some notional loss also. I mean, when I say notional loss, I mean, say tomorrow I'll focus on this particular strategy only. Tomorrow, for some reason or the other, I mean, this is very much likely. We know market is a little overpriced. We fell by, say, 500 points. Well, not just tomorrow. Say tomorrow the fall starts. Say within next 1 week, if we fell by, say, 500 points. So we will see some notional loss even with something like this, which is as safe as this. I mean, the reason is the future ka jo price hai, future and put will compensate for each other. But your put will be more expensive, and the call will not be able to protect you much. So just be with it. As long as Nifty is not below, as long as Nifty, does not go below 16,800, it will remain bullish as per the technical setup, even as on today. So till we hit 16,800, no need to do anything. I mean, if it hits 16,800, maybe we can do some adjustment and make it safer. And if it hits 16,600, some more adjustment, or we can come out of it.
So Mr. Sanjay Sharma, I think he has brought out another interesting point, that to be safe from black swan event, we can take a C or P weekly, which according to me, we should not be doing it. What is your view? Should we get into
my view is weekly or daily you can do once you are very, very trained. I mean, here I'm targeting at an audience which is new to the options. So like that's and people who are not who are not the typical traders who are on the screen from 9:30 to 9:15 to 3:30 every day. So if you are a full-time trader, and if you understand the volatility, if you understand all the other things, if you are very familiar with making adjustment, you can trade weekly also. But weekly does not provide you with with the range which is as broad as this.
Correct. So
risk is more.
Risk is more,
volatility is more. I mean, they lose value very fast. Your sold options, your bought options will lose value very fast. Even if you have bought something because there was no higher premium, so it will start rising, too rapidly. So if you can handle that kind of, that kind of volatility, weekly is a very good thing. There are so many people who make their living out of weekly options.
Got it, Puneet. We were talking about discipline, impatience, greed to earn more money out of what we are doing. So, according to you, what is the ideal returns one should expect from the capital employed if one is into options trading?
Depends on risk you are willing to take. What I suggest everybody is, like, you should train yourself thoroughly and expect a return of 4 to 7% every month. 4 to 6%. Okay, let us not mention the digit 7 also here. 4 to 6% is a very decent return. If you can manage that kind of return for 2-3 months, your capital will go up on its own. Today, like, I have a capital of say 50 lakhs. I cannot deploy the entire 50 lakh into naked option buying now. I'll buy, say, I'll risk 3, 4, 5 lakh rupees at best. Rest of the money will be lying unused. So, but when I have done these strategies, I have made 4-5% kind of return. I can easily deploy the entire 50 lakh into it. In fact, now, the way I work these days is, if I'm having some money which is not deployed anywhere, it gives me a stress. Kya yaar, ये तो पैसा waste हो रहा है. उसको रखने का क्या फायदा? I'll do something ultra safe. चलो कल आधा % तो मिल जाएगा, कल square off कर देंगे. Do something as safe as, which will definitely give you say 0.5% tomorrow, 0.8% tomorrow, 1% in 2 days. So no point in keeping the money ideal there. So if you learn the art of making consistent small return every month, your capital will go up eventually. And it will give you lesser stress also. Because I don't speculate, because I don't buy or sell naked options. मुझे कोई फर्क नहीं पड़ता डाउ कहाँ जाए, SGX कहाँ जाता है. Absolutely कोई फर्क नहीं पड़ता.
Obviously, with this much of spread, it is pretty much taken care of. Unless exactly. Something as severe as black swan event.
That happens once in 10 days. If I'm scared of black swan events, maybe I should not even look at stock market. मेरे को वो 3% tax काट के जो return मिलता है FD का, I should be happy with that. I should be happy with 3% return, 12% inflation. That itself is a risk, na?
No, completely agree. So what you are saying is, on an average, we can definitely, we should expect 5% returns from the capital employed.
4% I am saying, 4 to 6%. Okay, 4%. Depending on how market obeys you, how market moves as per your anticipation. Sometimes it doesn't happen. July was not a good month for either of us because it moved up too sharply. The last 2 weeks of July, were too sharp. So most of the strategies were to be, managed, or we closed them with some losses also. And that's another risk, not with the conventional option trading, but it happens. This 13,078 is probably actually the highest gain Nifty has made in a month. So anyway, the market is there to surprise you all the time. You can't control how Nifty moves. You can control your moves and make sure that your risk is in control. You can manage your risk well.
And even if we are eyeing 4% of returns on a monthly basis, I think we should start from the basics. We should learn things first of all, rather than really getting into trading. So we should learn.
Definitely.
Understand.
Definitely
We should do paper
absolutely
trading.
No shortcuts unless आपकी लॉटरी लगी हो, आपको कहीं से 2 करोड़ रुपया मिल गया हो. वो एक मूवी थी ना, माला माल. आपको याद है एक मूवी थी माला माल?
Correct.
There was a movie, उसमें कुछ था. Nasiruddin Shah has to spend several crores in 2 weeks. ऐसा कुछ obligation नहीं हो तो अपना don't get into it without proper training.
No, completely agree, because if you are going without learning, it is as good as you are going into a war without a weapon and without any formal training. So if you are going into a war without training, without a weapon, you know what will happen. So
exactly.
we
don't do any profession on earth without proper training. If you are a doctor, you need to slog several years in studying, several years in practice under guidance of a senior doctor. Then only you will start practicing. If you are an engineer, you need to go through all those qualifications and experience. Then only you will be able to take some independent decisions. But when it comes to stock market, we thought, okay, 2 दिन मैंने market को देखा, तीसरे दिन मैं कुछ खरीद लेता हूँ. So I'm risking my money like anything. I mean, बिना training के हम कोई भी काम नहीं कर सकते. And this is a very complicated काम. I mean, maybe more complicated than a doctor or engineer's job, if you ask me.
So the word of caution is very, very clear. Even if we are considering options trading as our secondary source of income, still we have to really struggle in the beginning to learn all the basics, to learn the strategies, to do paper trading. And once you are sure through those learnings, through those paper strategies spread over a couple of months, once you are 100% sure, then only you should start taking actual trade rather than taking trade from the first week itself. If you want to lose your money, yes, that's the best way to do it, but nobody would want to do it. But yes, it's not so easy. It is difficult, but again, it is something which can be done with so many people. So according to Puneet, 20% of people are already making good profits out of market, which is a great number. I was quoting probably some old data shared by Mr. Kamath of Zerodha, where 1% of people make profits more than bank FDs from trading. So probably that was a dated data. But yes, if you really want to do it, you have to invest your time, you have to learn things, and then only start implementing it, start playing around with your money. Then definitely it will be a secondary source of income for you. And let me tell you, the kind of scope what this investment and what this learning has, you may not come to know when this secondary source of income would actually become your primary source of income, which has happened with so many traders today. I mean, people who are traders today.
Me also. I'm the example.
So
I really regret why I was not doing it earlier. I started doing it full time only when Modi ji, made us sit at home sometime in June. I guess, June 2020. So prior to that, I was a consultant. I was a market research consultant. I was advising people on how to improve their customer experience and things like that. So I really regret why I was not doing it. Though I had qualification of Macquarie and everything, but I never tried it with Nifty and Bank Nifty earlier. So the moment I started it, say August, September onwards, I thought, I was doing a mistake while I was not doing it.
So Puneet, the problem is, when we are into a job, whether directly employed with into a full-time profession or working as a consultant for multiple organizations, it is a vicious cycle. And we actually don't get time to look outside of it, that there are so many opportunities which I can actually encash on. And you are right. You are not the only one. There are so many people. Another live example is me. It took me some more time. So I have recently moved out of corporate. But many people have realized during this lockdown that there are many more priorities in life rather than only being fully employed for a profession. Though I respect everyone. That is equally important. That is very, very important to gain so much of experience, create so much, such a big network. So it is required for someone to start his or her career, working for an organization. But yes, gradually, I think we should be very focused. What do we really want to achieve in life? Do we want to slog till the age 60 working for 16 hours for an organization, or we want to work for ourselves, where probably we might have to work for 18 hours or 20 hours, forget about 16 hours, because when we are working for ourselves, it is more tough, especially in the beginning. Actually, when things start settling down, yes, it is good, but you have to give more time. You have to spend more of your time and energy to really achieve your target.
I would like to add here.
Please.
Sorry.
No, go
please
ahead.
Go ahead. You complete first. I'll
No, you go ahead. So we have some questions in the chat box, but before we take those questions, so I would, also
general. I'll just add to whatever you have said. Basically, even in our corporate life, we always have a backup plan ready. We have a plan B for everything. No, if the plan A doesn't work, I have this plan B. So the pandemic has taught us that you need to have a plan B for your life also, for your career also. pandemic followed by this, ongoing slowdown. We are in a slow economy from, I guess, 2018. Like nobody has got very decent pay hikes in general. I mean, there can be some exceptions here and there, but in general, the pay hikes are not there. The employment scenario is not very good. So one must have a plan B kind of thing. This plan B can be equity or something else. I mean, everybody has realized that he should have a plan B for sure. Second thing is, say, like, this is my personal experience, but like when we started working, I guess that it was a very booming time when I started my career. It was say early 2000 and all. I mean, it was a very good time. The market was booming like anything. Economy was booming. We were getting good pay hikes. So we were very loyal to the organizations we were working in. But the slowdown has probably told everyone, has kind of made this clear to us that corporate किसी के सगे नहीं होते. Whenever things go wrong, the economies goes wrong, their profits say decline or the growth becomes slower. I mean, they'll remove you. Yeah, I mean, they'll not keep you for a very long time. They'll not keep you for nothing. Secondly, as we grow, say everybody starts his career as an executive or at a junior position. The moment you are more experienced, there are, say, a company require thousands of executive, maybe several hundred of managers, less than 100 general manager, and when it comes to further up, say VP, director, you need very few of them. So the more time you spend with the corporate, in general, this is with respect to everyone. There can be some exceptions. The lesser relevant you become for the corporate world as such. So plan B is very, very important. One has to have a plan B. It can be some consultancy or something else. A plan B to hona hi chahiye.
And see, ultimately, organizations are there to make profit.
Exactly.
When you mentioned that,
I'm not saying that मैं organization को blame नहीं कर रहा.
No, you are right. So, and all of us are here to make profit. So, if tomorrow,
had it been you are a proprietor, you realize कि हाँ पुनीत 20 साल से मेरे पास काम कर रहा है. पुनीत की सैलरी में पुनीत के बराबर का काम करने वाले 3 लोग आ सकते हैं. तो पुनीत will become a liability for you.
Exactly.
तो पुनीत को अपना इंतजाम करना पड़ेगा ना.
And let me tell you, Puneet, I mean, tomorrow, with God's grace, and I'm sure with the kind of expertise what you have, you might want to, for example, employ 20 people over a period of time. But, gradually, if either they are not performing or you don't need them because of the business circumstances, the requirement of the business, why would you want to carry them forever, right? Why would you want to consistently increase their salaries by 10% year on year if the performance
exactly. This is what I'm saying. The corporates, the kind of loyalty you show with your employer in the beginning, in the initial year of career, no employer can show the same loyalty towards you towards the fag end of your career, towards the last 10-15 years of your career. So you need to keep that in mind and have some plan B ready, pandemic or no pandemic.
Completely agree. So now, Puneet will take the questions what we have. I think Mr. Varesh Savalvade has a question that sold strangle also gives same payoff. Why we need to buy future and put if they nulls off each other?
Okay. If you basically the purpose of buying those two is to have a additional protection. Like every strangle has a risk associated with it. So what you can do is maybe you can draft something similar on any platform, Ostra or whatever you are using. You do it without this long future and deep in the money call, and with it, and look at how the Greeks change. So the purpose of having these two in the strategy is to, first of all, it gives you a reduction in the margin also. Secondly, it gives you additional protection, additional risk management.
So, Mr. Varesh, is your question been answered correctly, or you have some more query?
Yeah, I got it. Thank you.
All right. Anyone else have any question? I don't see any questions on the chat except for, I think, one note from Mr. Sanjay Sharma that great Puneet, people are taking 15,000 plus for this kind of strategies. what probably you are sharing for free. But let me tell you, that is the intent of having this platform, which is Value Talks, where we want to give you all kind of advisory services under one roof. And yes, these were sample strategies which were shared with you, but Puneet may talk for 1 minute about it. So if you want to take some formal coaching, training, or support with respect to strategies, I think Puneet, you can talk about it for 1 minute. And others, if you have any questions, please put it on the chat, or if you want to talk about your questions, please raise your hands and we'll take your questions one by one. Puneet, over to you.
Yeah, basically, like at the I'm planning to have some training sessions also. This particular mode of communicating with people have kind of encouragement to do that. But at the moment, I'm having a paid Telegram group wherein I share such strategies. I mean, not many strategies. Some of the participants are members of that group also. I share about say three to five strategies in a week. These are mainly based on Nifty only. And following those strategies, those are all low risk strategies. I mean, not as risk free as the one that I have shared recently. I mean, there is a little more risk than those, of course, but higher potential to make money also. But at the end of the day, they are all very, very low risk kind of strategies. And I mean, if anybody wants to understand the concept of low risk trading or learn how to make those strategies and have access to these higher number of these strategies, I mean, you can mention your query at Value Talk Telegram channel, or there is a WhatsApp number that that will be shared with you. You can put your query there, and maybe we can discuss it further.
Yeah, thanks for that, Puneet. And yes, I have already shared links for both the Telegram channel of Value Talks as well as the YouTube channel. If you are not yet part of these channels, please click on those links, subscribe to both the links so that you can have access to all the previous videos, the sessions what we already have. And, Telegram, whatever questions you have, even after this session is over, if you have some questions, you can ask those questions to Puneet. He's also part of that Telegram channel, and we'll be happy to answer your queries. So, Mr. Sanjay Sharma, please go ahead. I think you have raised your hand. So he's asking, Puneet, can we apply this strategy on stocks also?
Yeah, Sanjay, it can be applied, but many stocks are not very liquid. Many stocks are not very liquid. Nifty and Bank Nifty are very, very liquid for that matter. Also, there's a very peculiar problem with the stocks. I mean, something as reliable, as strong as Reliance can fall 8% in a day without, I mean, on the basis of a news, something which is not possible with an index. So in order to, I mean, avoid that, avoid those accidents, I prefer to do it with indexes also. But yeah, I mean, the rules are same. I mean, like people do it on commodities also. There are many people who do crude oil, even currencies, using the same principles. So it can be applied on anything, provided you know what to, I mean, how to craft a strategy, how to manage your risks well. But the risk is a little higher with the with individual stocks.
And Sanjay, whatever strategy you apply, whether on index or stock, as Puneet has already mentioned, on stock, because of liquidity, it becomes a challenge, and then volatility is generally much higher in individual stocks. But always remember, have the protection on. I mean, don't deviate from hedging, because if you deviate from it, then you might end up losing a lot of money rather than earning out of it. Puneet, thanks a lot for taking out time, and thanks a lot for sharing such wonderful strategies where people can actually earn profit without, I would say, any risk, though there is a disclaimer that risk is always there. But I think the strategies which you discussed, they were strategies with minimal risk and kind of confirmed profit coming out of it. And that is the reason why there are traders who are in the market, irrespective whether market goes up or goes down. It doesn't matter, because if you are a successful trader, you can earn money both ways. It's not only that you will earn money in a bull market and you cannot earn money in a bear market. In fact,
Exactly.
you can earn more money in a bear market because the movement is
If your pre-estimation is right, you can make money. If you can pre-estimate how the Nifty will move, which is very difficult, which is very challenging for sure. But if you can master that art, I mean, you can remain profitable anywhere, in any market conditions.
Right. So thanks a lot, Puneet, once again. And thanks everyone for joining this session, for listening to us for the last 65 minutes. Thanks, everyone. Hope to see you in the next Value Talks session. Good night.
Good night. Good night. Thank you so much.
Gotta focus on yourself, on your faith, on your dreams, on